Hello, hi everyone. Welcome back to daily trading video series. Today, as always, let us start with Nifty initially, and from there we'll go ahead with the next uh, stocks and some of the interesting things that we'll look for today. Okay. So today, first coming to the Nifty. Nifty is in a very, if I would say it's in a very weak zone right now. So if you see in the Nifty here, the 15-minute chart, you can clearly see it has gone to around if 11,630 or just falling back again. It's just moving around. There is no clear trend as such. Okay, so nothing actually very any significant thing that is happening. There's no significant thing that is happening, and we are very close to election results. This is on the expected lines, so it's consolidating more and more and more. Okay, so that's it about the Nifty part, and now let's actually discuss some interesting things today. What we shall do is so coming to the stocks that we discussed before. One thing I would like to mention, RO Pharma actually had a false breakout. So it did go up, but then it fell off fiercely from the top. And this was unexpected. And also, Nifty Pharma also came off the highs, didn't break out actually. That day it was looking like breaking out on 26th April 2019, but it didn't break out. And as such, the along with the market, even this actually it fell even more, and right now it's at again another support. So that's what is happening, but still there are hopes for those who are holding the stocks of Sun Pharma or Aurobindo Pharma. Please continue to do so. There's nothing seriously wrong or anything, but it may take some time. It's still not an exit call. Okay, so you can still hold on to it if you're holding stocks. Okay. Okay. So today what we shall actually discuss is about these moving averages and their significance in the things. Okay. So let's see first of all what is what are these lines. Okay. So these lines are basically called as moving averages. So what is a moving average? A moving average is one where it gives you. So as the name suggests, it's a moving average. So let us first consider 200 moving average. What does this mean? 200. So we are in the daily time frame. So we'll understand first in the daily time frame, then we can extend it to other time frames. Okay. So first in the daily time frame, if let us say we are a 200-day moving average, that means this is the average of the last 200 days. Okay. So if you consider the last 200 days, how does the average look like? So that you plot on every day. So so as of today, the last 200 days average. As of today, what is the last 200 days average? As of today, what is the last 200 days average? So this keeps moving up. So this basically what happens is the average tends to give you what is happening in the most recent time. So how is it? How are the things changing in the most recent time? That's what it tells you. Okay. Now coming to so there are three very significant averages. Actually, yeah, actually two. One is the 200-day moving average and one is the 50-day moving average. So any stock if you take, okay, so even Nifty if you take, let us take a Nifty example. Okay, so whenever so there are two things. One is support and one is resistance. The simple logic is that whenever a Nifty goes up and it is falling down, okay, When it is falling down, you tend to look at the supports. Okay, that means when it is falling down, where it can stop falling. Okay, what are the, I mean, which, at which price there is a very high chance of stopping to fall. Okay, and when it is going up, similarly, where is the place where it can stop going up from there? Okay, these are the things. The thing. So now what happens is, in terms of averages, so whenever a stock falls to either 200 or 50-day moving average, the initial test always leads to a bounce back in 98% of the 90 to 99% of the cases. This is what happens. So even if you see here, in most of the, see, there is a fall in Nifty here on from 15th May 2018 to around this one, and immediately it hit the 50-day moving average, and there is a bounce back. Again, it hit the 50-day moving average, there is a bounce back. So, yeah, in some cases, it generally goes a little slightly. That could happen when, especially the real big breakouts and sorts are happening. These type of things happen. So what happens is, this is the psychology part where it tries to fool you, making you believe that it's the end of the. I mean, it's going to fall further, and then the next day, if you see, it completely what you can say. So the previous candle that was there, this is the on 29th June. It actually opened a little higher and then crossed the previous day's whole range. Correct. So this type of thing generally is an indication of some bullish thing to come up. So, but otherwise, in most of the cases, whenever there is a fall, 50 and 200. Well, 200 is an even stronger thing. 50 is a minimum thing. Okay. So there is always this thing. And similarly, when it is going up, those act as the resistances as well. From down when it is going up, they'll act as the resistance. So this is the 50-day moving average. Now, here, if you see, in this case, each time it tried to touch 50-day moving average, it wasn't able to. See, it tried to go above 50-day moving average, it wasn't able to. Again, tried, failed. Third time, so as I always said, third time whenever something happens and then fails, that's the best thing. That means that then you can go short blindly. I mean, whatever side it's not able to cross, the other opposite side you can go blindly. So basically, here what happened is 10,536, and now we went to 10,624. So all these three times it hit that, and it was never able to cross. Third time it fell badly. And now you see this. Here, this is the best example. Here, if you see, this is your 200-day moving average, as you can see on the screen. So now, whenever you hit this 200-day moving average for the first time, bounce back. First time, this is always sure. Okay, so that's called the support. And again, of course, it tried, and then came back. So this is what happened. So whenever that's the importance of 50-day moving averages and 200-day moving average. So basically, that is because in the last 50 days, this was the average of the prices in the last few days. So I mean, it's a significant amount of time. So therefore, the thing is, whenever the price goes farther and farther away from the averages, there is a high chance that you can have a correction in the price, because that means it has gone up too quickly. When does the prices go far away from the averages? So this is your 10-day moving average, this blue line. So 10 days should definitely be close to your this thing, because last 10 days more or less it should have been the same. Right. So last 10 days this was the average. So therefore this will be close to the prices. Last 50 days will not be close. So when the market is going up, last 50 days average will definitely be farther away from the current price. And whenever this type of thing happens where the market is sideways, 10 days, 50 days, 200 day, everything will be very, very close to each other, because over the last that many days also there is not much going on. Correct. So that is how you will understand what's happening. Okay. So in the sideways, this support logic will not work much. Any other, whenever there is a trending move, that is when it is going up, either up or down, you can use this. Okay. So that is the idea about 50 and 200-day moving averages. So 10-day is the one where most of the time when market is going up, the prices tend to be above these averages. And whenever it comes to this average, it will try to come back again. But when something goes really bad, when it falls off below the 10-day moving average and keeps going down, that is when you should be a little careful. That means you could see a reversal of a trend possibility. But still, that is not the main idea anyway. Okay, so that's it for today. We learned something about averages. Hope this helps. Uh, if you have any doubts or this thing, you can always post in the comment section, and I'll be really glad to help you. Okay, cool. We'll discuss more about in detail about how the average is calculated and all in the basics videos. Okay, that is another series where we learn about applied trading basics. This is more of a daily video. Okay, that's it for now. Today there are Sun Pharma advanced results, so let's see how it goes. Okay, cool. Uh, have a nice day, guys, and bye bye.